All right, so in this video, guys, we are going to go over the main setups, right? I do have different setups, later on in the course, okay? But these are the main setups you're probably going to use, period. So let's go over these setups real quick. So you're going to use these tail bars right here, okay? The reason why it's a tail bar because we have this nice tail right here. Some people call it pin bars, whatever you want to call it, I don't care. All right, so this is a bearish tail bar right here. Notice how this is a green candle, but it's bearish. Why? Because we have this small body, okay? As long as the body is small, we have this tail right here, that's good enough to get in. Same thing right here, this is a nice bearish one, small body, okay? Now, so this is a nice bullish one right here, okay? Small body, nice tail. And same thing with this, even though it's red, it's still bullish because we have a nice tail and a small body, okay? So those are the tail bars we are going to use. Now let's go to the solid bars. Now here's a nice solid bar right here, guys. These solid bars, basically we want it to close pretty much at its high right here. Now it don't have to always close at its high because sometimes it doesn't. So let's say that we have a nice tail right here. So let's say we have the market doing something like this. So if we have this right here, let's say this is a tail right here and it's closing right here, that's good enough too, okay? As long as it closed around 80%, okay, at its high, we want to take this bar. Now if it closed around like 50%, we don't want it that bar because most likely that's not a strong bar. The bulls is weak and pretty much the bears pushed it back down. Same thing with the bearish solid bar right here, okay? Even if it has a little tail right here, it doesn't matter. As long as it closed somewhere around here, we good enough. We can still take that trade. Okay, so let's go to some chart examples right now. Okay, so here is an example of the tail bar. Okay, we have the market breaking out right here. Okay, breaking out right here, and it pulls back to this nice demand area right here, right? Lovely first pullback. I love this trade right here. Okay, and basically you got some nice profit off this trade. So we have this nice tail bar right here, small body, nice tail. Okay, get in the market as soon as it goes above, okay, that candlestick. Okay, so because I remember someone asked me before, okay, do you get in as soon as it goes above the candlestick? And that is correct. Okay, so as soon as you see this candle right here, as soon as this candle goes up and breaks the high of this candlestick, boom, you're in. You put your stop loss below, okay, the candle right here, and you get in. So you're risking this, okay, and you get it in, and basically you're looking for your profits. Let me show you an example of a solid bar. Okay, so here's an example of a solid bar, guys. Here we have the market pretty much breaking out. Right here, it pulled back to this small swing low right here, okay. You just need a one candle for a pullback. You have to understand that one candle. If the market goes down and it pulls back one green candle and it goes back down, that's it. That's a swing right here. Okay, so it pulls back to the swing low right here, right? And guess what? It gives you this nice bearish solid bar right here. You can go low as soon as this candle right here. This candle goes below this low of this candle right here. Okay, you get in, put your stop loss above this candlestick right here, and you look for your profits, right? So that is a simple way to get in. And if you're dealing with candlesticks, guys, you have to understand, you have to at least try more than once, guys. So let's say that you got stopped out right here, okay, and it didn't go that far, and it showed you another nice solid bar right here. You can get in that trade, right? So don't think just because you got stopped out on this trade, you can't, try one more time. So keep that in mind, especially if you're dealing with candlesticks, right? Now, let me show you guys some more setups you guys can use. So the next setup you guys can use are breakouts. So any type of breakout, consolidation breakout, trend line breakouts. Now, when it comes to breakouts, guys, you want to trade the consolidation breakout near the 1 hour breakout. So let's say this is the 1 hour breakout right here. Notice how, it pulled back, okay, near that breakout. You want it near this breakout right here, because if, let's say that the market did something like this. Let's say the market shut down, right, and then give you consolidation right here. See how far this consolidation is away from the breakout? You don't want that, because a lot of times they would do some fake breakout and then go right back to the breakout. So you want that breakout to be very, close to the 1 hour breakout, right? And you can take this consolidation breakout, just for that continuation, right? And also we have a nice trend line breakout. It came right back, okay, to this breakout right here, and we had this nice trend line breakout right here to the downside. All right, so you could use breakouts too when you're trading these 1 hour breakouts, if that's one of your subs that you want to use, right? So let me show you guys another way you can use the breakouts. Okay guys, so here is another way you can use a breakout. So let's say that the market didn't break out of this 1 hour breakout yet. If you see any type of consolidation right at that breakout, you can take it. So let's say right here, okay, you're waiting for the market to break out of this 1 hour breakout, and it didn't break out yet. Let's say this didn't break out yet, and we see this consolidation going on right here, right? And it starts to break out right here. Guys, you can take this because this nice build up before it breaks out usually means that the market is going to break out and continue to go back up. So it's the same thing if the market goes down. Let's say that this is a downtrend, and we see a nice build up right here. All right, we can take that build up before it breaks out of that 1 hour breakout and basically take this trade to the downside. So notice how we have that build up right at that breakout, and then as soon as it breaks out, you can take this nice little consolidation breakout, okay, for a continuation. So that's another way, guys, you can get in with breakouts. You can trade that breakout before the 1 hour breaks out, okay? That's the only time you're going to basically trade the breakout right away. But for the most part, you're looking for the market to break out first so you can take those pullbacks, okay? And let me show you guys another way you can trade a breakout. Okay, so another way you can trade a breakout is usually when the market is very strong, it breaks out, right? And it gives you this nice pause candle. Usually it gives you like one candle, okay, down, and then it shoots back up. So you can, a lot of times you can just take this breakout right here, okay, if you want to. And if you go to the 1 minute chart, you will probably see a nice flag breakout. So let me show you. Okay, so here's the 1 minute chart, okay? So that's the same swing high right there, okay? Now notice how we have this nice flag, okay, on that 1 minute chart. So if you see a nice pause on your 5 minute chart or a 4 minute chart, usually that means that the 1 minute chart is flagging, okay? And if you want to take that breakout, you can take that breakout for a nice trade, okay? So keep that in mind, that if you want to take these type of breakouts, you could, especially if the market breaks out, pause this one candle, drops, and then shoots back up. There's a strong possibility on that 1 minute chart it's probably just a flag, and then most likely the market is probably going to continue to go higher. So that's another way you can play a breakout when it comes to trading these 1 hour breakouts, right? So that's something that you can keep in mind. And again, I don't know how many of you guys are trading a 1 minute chart. I tell you guys, if you're new, you should not trade a 1 minute chart. It can definitely get you in a lot of trouble. Me personally, I have been trading the markets for 13 years, so I have no problem trading a 1 minute chart. But the reason why I'm actually bringing up the 1 minute chart right now is because the 1 minute chart really shines when the market is breaking out. You can go to that 1 minute chart and you can see a lot of good opportunities, but at the same time you can get stopped out a lot of times too if you don't know what you're doing. So that's why I tell people, listen, start with your 4 minute chart or 5 minute chart. That is the best thing to do, because everything is much clearer. And when you get some experience under your belt, if you want to go to that 1 minute chart, you can do that, okay? But I tell you this, if you're getting stopped out a lot on that 1 minute chart, please go right back to that 5 minute chart, right? So let's go to the last setup you guys can use, which is limit orders, right? So a limit order is basically a pending order you put in the market. So let's say you want to buy a stock at $10 and you put that pending order at $10. So when price comes to that $10 level, you are in the market automatically and you're waiting for price to continue to go back up. So let me show you guys some examples on how to trade with limit orders. So let's go. So let's say that we have the market breaking out. Notice how we have this small candle right here, okay? So this is, again, okay, a swing. So when the market comes back to this area right here, a lot of times you will see it hits this area right here and continue to go back up. So what I would do, I would basically put my stop loss below, okay, the range, just little swing right here, okay? So I'll put it below this candle right here. and pretty much get in as soon as it hit this swing high right here, and basically put my stop loss right here, and I'll look for either 2 to 1 or 3 to 1 or whatever the case is, right? So that is how I get in with my limit orders, especially if I see a nice consolidation. Notice how we have this consolidation right here. If I see that, definitely I would love to get in right here. We have all this protection right here. So as soon as it goes to this swing high right here, I get in. I probably put a stop loss either below here or here. A lot of times it will never go below here. So sometimes I'll put it right here so I have the small stop loss, and basically I'll look for my reward, right? So that's a good way to trade when you come to limits, because a lot of times when the market is breaking out, believe it or not, all it wants to do is just continue to go up, right? It's not breaking out for no reason. So when the buyers break out, it's not really trying to, shake out people or trying to play any games, especially the first pullback, second pullback, right? It just want to really go up. So a lot of times it will just go to that swing high, and you can just, put your stop loss below that swing high, and it'll bounce off that, and continue to go back down. And another thing is, if I have a nice consolidation right at, okay, this breakout right here, and let's say the market breaks out and it pulls back to that consolidation, I would love to get in with a limit order right here, okay? But if I don't see a nice consolidation, I probably wouldn't go with a limit order right away, okay? I'll probably wait for some type of base to form. So we have this base right here. So when it comes to limit orders, okay, right off the gate, I'm not trying to basically go with a limit order, okay? It has to at least give me another high. So right here, only way I would go with a limit order if I have a nice base. Notice how we had this nice consolidation. If I see that right here, I would definitely go with a limit order right here, okay? So keep that in mind. That first pullback, I'm not going to get in with a limit order if I don't see a nice base. I'll probably get in with a candlestick, okay? But let's say that it didn't give me an opportunity, or it didn't give me a base. Notice how it just gave you a nice pause right here, and it shot up. So that's all I need. I don't care. If it pulls back to that nice swing high, I'll put it with a limit order, okay, and get in. So let me show you guys some more examples. Okay, so here's a good example right here. We have the market breaking out. We build this base right here, guys, and basically if it comes back to this base, I'm going to get in with a limit order, right? Because if this is a real breakout, it's just going to keep going. Like I said before, that first pullback, second pullback, the market really doesn't care too much about shaking people out. Yes, they will shake a couple of people out sometimes, but for the most part, man, the market just want to continue to go back up because it's breaking out for a reason. Most likely it's trying to go to a specific resistance area, whatever the case is, to take out some orders, whatever the case is. But we can take advantage of that, and get in with a limit order, any pullback that we see, and put our stop loss below this consolidation, and then continue to go back up. So let me show you guys another example real quick. All right, so here's another example, guys, right here. I'm showing you guys a lot of buy examples, but it's the same thing if the market is going down too, right? So right here we have the market breaking out, but I actually like this right here. This is a nice consolidation. So let's say that the market did a nice pullback and then pulled back to this. I honestly, I'll probably get in with a limit order. There's a nice little base right here. But that's why I like this swing high right here better, because we created a new high. So if we create a new high, that's telling me that most likely the market wants to continue to go back up. This one, if it breaks out right away, we don't know if it's going to create a new high. So we're just basically hoping that it will, hold this level right here. That's why I said if I don't see any type of consolidation, I probably won't go with a limit order right away, because I don't know if we're going to create a new high. So anyway, we created a new high right here, guys, and notice how as soon as it went to this swing high, it bounced back up. I would definitely get in with a limit order, put my stop loss below here, okay, and look for my profits. And also, when it comes to the limit order, guys, I want you guys to know that I only do it with the first pullback. I don't do it with the second pullback. Yes, it probably can work with the second pullback. Me personally, I don't. I only like to do it with the first pullback, because the first pullback is the best trade, period, hands down, right? High quality trade. So that trade most likely is going to work with a limit order or a candlestick. So I only do it with the first pullback. So keep that in mind, because some of you guys be on a fourth pullback and try and do a limit order, or you on that fifth pullback and try and do a limit order. And guys, most likely they're gonna blow right past, okay, a zone or a swing high. So keep that in mind, right? Okay, so let's go to the last example of a limit order trade. So notice how we have a breakout right here and the market pulled back. Now, I'm not going to get in with a limit order right here because we don't have, okay, consolidation anywhere around here, all right? But notice how we created a new high right here. So I like this new high, and if it pulls back, okay, I definitely want to get in with a limit order. Now, remember what I said? I like to get in at a swing high, but notice how the market just went up just a little bit above the swing high, and then it pulled back. So me personally, I wouldn't get in at the swing high. Only if the market maybe blast up like this, right? Created a nice little gap, and then it pulled back down to this swing high. Yes, I would probably get in as soon as it touched this swing high. But it didn't do that, okay? It just broke the high just a little bit, and basically it went back down. So this type of trade, I will get in either at the last candle, which is right here, this last green candle, or I will get in somewhere right here around this swing high. So notice how the market went down, pulled back, and went down. So this is a swing right here. So I get in either right here, or I will get in at the last candle. It's around here. So I will get in right there. I'll put my stop below this swing low right here, okay, and then I will look for my profits to the upside. So that is a good example of how to trade a limit order if the market doesn't break high. It just breaks a little bit and creates a new high, but it pulls back to one of these levels right here. Remember, these are our key levels right here, okay? You still get in and you look for that trade, right? So that is a good example of a limit order. Now we are going to talk about risk to reward. Now, when it comes to trading these 1 hour breakouts, guys, for the most part, what I like to do, I like to go for a 2-to-1. So whatever I'm risking 2 times. So let's say I got in right here, right? And I know that I'm risking this candlestick. So whatever size this candlestick is, so let's say that this is a 10 pip candlestick. So I'm looking for a 20 pip reward, okay? So whatever size of this candlestick times 2, that's what I'm looking for, okay? So that's what I usually do when I'm trading any type of 1 hour break. Minimum, I'm looking for a 2-to-1. Sometimes you can even get more than a 2-to-1. A good example is, those deep pullbacks where the market breaks out just a little bit and it pulls back. These type of trades, you can definitely get way more than a 2-to-1 because you're catching pretty much the bottom of the breakout right here. Let's say you got in right here. Notice how this couldn't close below this low right here. So let's say you got in right here. Okay, you can basically get all this reward right here. All right, and you can look for bigger rewards because you're catching the bottom of the breakout. Okay, all right. So make sure you keep this to yourself. Let dumb money continue to trade the way they trade, and we're gonna trade a smart way. So this is how you get some nice big rewards. Trading in markets, and that will help you grow your small account. All right. So minimum, I usually go for 2-to-1. Sometimes if I feel like I can get 3-to-1 on a breakout, I do that. But if I'm doing something like this, yes, you can get way more than a 2-to-1 or 3-to-1. You get sometimes 6-to-1, sometimes 5-to-1s, sometimes even 10-to-1. Okay, so guys, those are the main setups you guys are going to probably use when you're trading. If you have a specific setup that you like, you can trade that also. So the next video, we're going to talk about looking at the horizontal lines and, drawing the small and the major support and resistance. All right. So let's go.